All right, folks, welcome back. All right, so I'm testing something out here. Okay, so while the server is not going to be brought back, but I can put videos up on unlisted directories per user group. So we'll test this out. If it is abused, then obviously, we'll go back to doing the forum posts. But I'm at least giving it a shot. Let's put it that way. Now the dollar index is our daily chart. You see we had our S&T divergence in here. My attention obviously has been on index futures, so I'm not really interested in the currencies, but obviously I have to give you what I'm expecting. Diverged here. Draw on liquidity up to 106.42. We got that in here. Next draw on liquidity is 105, big figure, and consequent encroachment, and then 107 level, and then 10761, top of the old imbalance. Hourly chart, you can see we had 4th of July's trading here, listless, then trading down into this old low, back and forth, whipsaw, and then drops down into small little retracement from the high of this candle. And then 3 o'clock in the morning, London session, market vaults up, then tags the 106.42 level we were looking for. Beautiful delivery of price action. And the 15-minute time frame, you can see we have small little juice swing here in London Open. And at 3 o'clock in the morning, just took off like a rocket. Not much more you could do except for get out of the way. Small little fair value gap in here. Drops down into it, but you'd have to be so quick and nimble to get on that. And then rallied up. Small little institutional order flow entry drill here. And here as well. Small little imbalance. Institutional order flow entry drill here as well. And then rips off into the buy side liquidity that's resting inside that old gap. Obviously, we've been looking for potential 3 Indians pattern in here inside of the CIVI. So we had this high being taken here, this high being taken there, broke down, sell side, and sell side with the old weekly lows. If you zoom out to your weekly chart, you'll see that low 1.03403, that's the old weekly low. It smashed through that like it was nothing. Hourly chart on Euro, fair value gap right here. Optimal trade entry, trades up into it, breaks lower, attacks that old weekly relative equal lows, and aggressive run deeper in. Can it return back into this area here and not go back to that level? That's something that would be interesting. But we have to see what we're going to get in regards to this area in here. Do we get to it to rebalance and trade lower, or do you trade back above it and find that support to take us into that level? That's kind of like what we're looking at. Non-farm payroll week, obviously. FOMC tomorrow. Just one of those weeks where I'm just not really, excited about doing anything with, to be honest with you. But let's set up this move here. We have low, high, break and shift in structure here. Retrace back to what? This is the YouTube model, or our model 13. Because we have buy side here, taken. We break to the downside, shift in market structure, go back to the fair value gap, bang, then delivery. Right out of the education I've given you for that model, just applied to an hourly chart. All right, so dropping down into the E-mini S&P, obviously I'll leave the British pound to you to study. It delivered as well to what we were expecting. Daily chart on the left-hand side for S&P. Daily chart for the NASDAQ on the right-hand side. Notice the lows in here. So we had today's low go lower than this low here on S&P. Did not see that occur on the NASDAQ. So relative strength later on the upside is NASDAQ. I didn't want to trade, as I was mentioning on Twitter this morning. I didn't want to do anything this morning session, but I did want to concentrate on the afternoon session should it provide something. We had consolidation. We broke down. Institutional order entry drill here. Breaks down. I was looking for 37.40. That was an interesting level for me. If it would have got below that, then I would have been expecting this type of move here. But it didn't get to 37.40. Just fell short of that. And same thing here. Consolidation. Breaks lower. Institutional order entry drill here. Breaks down. And tears off higher. Now notice the relationship between the low to this high on NASDAQ versus the high to low relationship here. S&P is reluctant to go higher. Why? S&P is able to make the lower low, whereas NASDAQ was unable to make a lower low. Prior daily low. That's what we're referring to. All right, 15-minute time frame. You can see relative equal highs here, not touched yet with S&P. Relative equal highs was the target on the relative strength leader, NASDAQ, because NASDAQ was unwilling to go to its previous day's low. So it vaulted higher. We had a shift in market structure here. Trades down, rallies up, comes back down, finds some support, rallies once more. So in here, I'm utilizing the market maker buy model. I'm in the pair, or not pair, but I'm in the index future that's relatively stronger than the S&P. So it failed to make a lower low on the daily chart. So we have an imbalance in here. I watched the price trade down into it, and then it moved away, and then we'll use this area right here, targeting this high. That's this one here on the 5-minute chart, being refined. Trades down into it here, bounces down into it once more, and then I'm looking at this breaker, which is really hard to see it here, but promise I'll go down the lower time frame in a moment. But during the index futures PM session, I'm focusing on that. The market's been supporting price. All down closed candles have been supporting price. Bearish candles, order block, rally. Fair value gap, digs into it. Institutional order entry drill, does it rally up? Yes. Does it find some support here? Yes. So the next candle, I want to be looking to go long. And we're inside this bullish breaker, which will look more obvious when we get into the next slide. All right, so on the 1-minute chart, you can see we have this low here. Why not this one? Because this one's already went into that imbalance, and we moved away from it with just a wick. So I want to look for a swing low that doesn't have much of a wick on it. So we have swing low, swing high, lower swing low that digs into that level, which is the imbalance, and then it rallies up. So I'm using that last up close candle here, extend that out in time. You can see my fill here at 11,684 3/4, and that candle right here is, if I'm not mistaken, 11,683 and something. I can't recall what it was, but it was lower than where I was getting in at here. So I'm buying inside that bullish breaker right here. Now you might not look at that and see it as a bullish breaker, but I'm looking at it as these relative equal lows got swept. So I want to be inside this candle here. I don't want to wait for it to break out. I want to capture it in here. So it does retrace back a little bit in here. I miss a little bit of that. I think it was like 2 handles of retracement. That's fine. That's not a big deal. And then rallies off. First partial here. I took 6 of the 12 lots off at 11,729.5. Then 3 more at 11,738.25. Then 1 more at 11,745 3/4. And 1 off at 11,759 3/4. And then finally, above the relative equal highs, the final portion gets closed at 11,761.5. Prior to the retracement down in, once more, a stop hunt, relative equal highs is target, it clears and just digs into that going into the close. Also, notice that if you wouldn't have gotten in this one, you could have used this S&T divergence here for the last hour of trading, and the fair value gap here, relative strength leader on the upside for the last hour of trading is S&P, and it moves higher there. Sympathy play after a stop hunt on NASDAQ, it rallies up higher. So again, like I said, I'm just testing this today to see how you guys do with it. It's a very short video, so I'm going to put it out between 4 different user groups. So I'm grouping you all in different membership group. Obviously, if it gets shared and thrown around, then we'll just stay right back inside the forum, which is fine by me. But we'll see how you guys do with it. Hope you had a nice weekend. Hope you had a nice 4th of July. Until tomorrow, midweek. This is kind of like the Monday, which would have been Monday's discussion. We're doing it today, obviously, because it was holiday yesterday. So you'll have one more tomorrow, and then we'll talk again on Friday. Talk to you then. Be safe.